and gentlemen. Welcome to the Sasfin results announcement for the year ended 30 June 2014. I'm doing the welcome. Our chairman is not available today and he sends his apologies. He's got a personal matter to attend. We're also aware that the results were released this morning in the business day and also on SENS ahead of our schedule or embargoed time. So now that you've had sight of the results, had about a few hours to digest it, is it necessary for us to continue with the presentation? Nevertheless, I think we'll share some insights and give you some overview of our results, and I'll get on to that straight away. Looking at our business model, we've got an updated one that incorporates our newly launched transactional banking business. This journey we commenced last year, and we're firmly on track. We'll cover that in a little more detail. The business model out here in the wheel captures our various financial services and offerings to the market, which reflects a very diversified financial services group. Before we get into the actual results, just to give you some context in terms of the business environment, globally, we see a gradual recovery taking place led by the US. However, China, which is a significant contributor to growth, has been facing a bit of a crunch, exacerbated by a shadow banking crisis, which is affecting global growth numbers. On the domestic front, South Africa, coupled with our twin deficits, faced significant headwinds during the year, and that was caused by prolonged labor unrest and high levels of unemployment in many sectors. We've also experienced rand volatility and an increase in interest rate environment, which has impacted on the growth levels, well below the government's medium-term targets. There's concern around consumer over-indebtedness. I think the slow level of economic activity is a contribution to that, and also sovereign downgrade concerns still remain, which is placing the economic growth under significant pressure. At a Sasfin level, Sasfin focused on its core business activities. Total assets grew by some 25% to 8.2 billion rand, underpinned by 17% growth in gross loans and advances to just under 4 billion rand. In addition, our funding base has grown up by 22% up to 5.4 billion rand, which has contributed to a healthy liquidity surplus of 2.1 billion, up from 1.6 in 2013. Also during the course of the year, on our balance sheet, we've reclassified certain equity accounted investments as private equity investments, as these investments are more, characteristics are more of a private equity in nature than equity accounted in nature. This has resulted in an increase of approximately 9 million rand in earnings, which we'll cover a little later. Overall, headline earnings were up 14% to 154 million rand, and headline earnings per share up 15% to 486 cents per share. Total income growth of 18% for the period. Across all the business segments, we've seen positive growth, an increasing top line, and continued expansion of our non-interest revenue base. Net interest income grew by 15% on the back of the strong growth in loans and advances. However, this was partly impacted by the negative carry costs on the higher liquidity position that we've carried during the year. Group operating costs showed an overall increase of 17%, excluding a 10 million rand goodwill impairment that we had to take relating to a prior year acquisition in our corporate finance business. Our operating costs went up by 15%, largely attributed to growth in staff numbers, and this was in the wealth division, our newly launched transactional banking division, the fixed income team that we brought on board, and also the expansion of our treasury operations into the Western Cape area. Overall, the group's cost-to-income ratio was unchanged at 72%, whilst the banking group was at 64%. What we did see was a positive jaws ratio of 3%, which reflects that our income is growing faster than our cost base. Looking at the numbers in a little more detail, firstly, the key features. As mentioned, headline earnings per share up 15% from 421 cents to 486 cents, and headline earnings at 14%, 154 million rand. Similarly, in line with our dividend policy of 2.5 times cover, the group has declared a dividend which amounts to 191 cents per share, 14% increase over 2013. Total equity, there was no reason for us to raise any additional equity due to the newly announced Basel III requirements. Our our equity position remains very comfortable, up 8% to 1.3 billion. Total assets, 8.2 billion. Gross loans and advances at just under 4 billion at 3.98 billion. Encouragingly, we've seen a positive trend in our non-performing loans. That has come down by 31% from 5.6% in 2013 to 3.9% in 2014. Credit loss ratio has crept up marginally, 10 basis points to 80. Both the credit loss ratio and the NPL will be covered in the business banking sector in a little more detail. Our funding, we've been very successful in raising additional funding and diversifying our funding base, up 5.4 billion, 22% increase. We see continued growth in our wealth management business. Funds under administration and management has grown to 91 billion, a 28% increase. And return on shareholders' equity, excluding the goodwill impairment, crept up 100 basis points to 15%. Our capital adequacy ratios remain well above the regulatory requirements at 23%, however, down by 300 basis points compared to 2013, and that's a function of the growth in our assets and also the new Basel III requirements. Looking at our balance sheet in a little more detail, cash and liquids, over 2 billion rand, just under 2.1 billion, a 31% increase. Loans and advances, we've covered that. Financial assets held for trade facilitation, this relates to our fixed income trading. We do carry proprietary bond positions. There's a new item on our balance sheet this year, reverse repurchase agreements relating to the bond trading activities. Last year, this was represented on a net basis, and in terms of the IFRS standards, we require to gross them, and that's in relation to the bond trading positions that we hold. Investment securities and investments in associates, as I mentioned earlier, we reclassified certain investment in associates. That's partly led to the growth in our investment in securities, coupled with some new investments that we've made. Investments in associates, that's the reason for the decrease due to the reclassification, whilst plant and equipment and other assets showed no significant movement during the year. On the liabilities and equity side, equity up 8% to 1.3 billion. Interbank funding, we utilize in our interbank lines. This is to facilitate the growth in our trade finance activities largely, whilst our deposit from customers has grown very impressively, up 25% to 2.7 billion rand. And as I stand here today, our deposit book is in excess of 3 billion. Long-term loans, a 21% increase to 652 million rand. I'll cover that in a little more detail later. Similarly with our debt securities, which is our securitization vehicle, up 14% to just under 1.6 billion. Financial liabilities held for trading, this is the gross position that we reflect that I mentioned earlier in respect of our fixed income trading activities, showing 551 million, and the repurchase agreements that we go and hedge out in the market to hedge out these positions, 53 million rand. Looking at the financial performance, net interest income up 15%, non-interest income 19%, and as I mentioned, we've seen positive growth across all segments, resulting in total income growing to 18% to 888 million rand. Impairment charges off a low base shows a large percentage increase of 32%, but that's gone up from 22 million to 30 million rand. and credit loss ratio uptick of about 10 basis points to 80 basis points. Operating costs, we've just unpacked that in a little more detail. Staff costs up 17%, and as I mentioned earlier, that was largely due to the increase in staff numbers across certain businesses that we are expanding and growing. Operating expenses up 13% due to investment in IT, rental costs, etc., whilst the goodwill of 10 million rand is a once-off item on our cost line. Income tax expense up 24%. Our effective tax rate has crept up marginally from about 20% in 2013 to about 21%, 21.4% in 2014. And that's due to the previously equity accounted earnings is now reflected as fair value gains, and that attracts a CGT charge. Looking at the segmental analysis, and this is a very positive reflection of the group's performance. All business units across the group have shown growth and shown a positive contribution to profit for the year. And it's quite important to mention that business banking has now crossed over the 100 million rand as contribution to profit for the year. Looking at our headline earnings and return on equity graph, a positive trend. Following the dip in 2011, we've seen a steady increase upwards, and we currently, headline return on equity is at 15%. Headline earnings per share and dividends, similarly a positive trend, showing the growth from 2011 up to 2014, 486 cents per share and 191 cents dividends per share. Total revenue, and I think this is also encouraging. We see our non-interest revenue represents around about 72% of our total income base, and the interest revenue around about 28%. So that's up from last year of 21% and 20%, 29% respectively. Loans and advances, strong growth in loans and advances. I'd just like Linda is going to talk about this in more detail, but just to give you a 5-year view. In 2010, our book was just under 2 billion. In 2014, our total lending is just under 4 billion. It's doubled over the 5-year period and post the crisis. And what's also encouraging, we've seen a good steady downward trend in the NPL ratio, and similarly that leads to a positive coverage ratio as well, whilst our credit loss ratio has crept up, has dropped quite notably from the 2010-2011 years, and it shows a slight increase in 2014. The group funding mix, this is a positive reflection. The group's success in raising funding. It's been a focused attempt and a focused effort to broaden and diversify our funding base, which we've achieved fairly successfully. Our funding has grown from 2.2 billion in 2010 to 5.4 billion in 2014. Also, a growth of almost 100% over the 5-year period. What's equally encouraging is that our reliance on certain forms of funding is no longer that exists. We have a much stronger deposit base. Our deposit base is 2.7 billion, represents just close to 50% of our total funding, and our securitization funding has dropped from over 40% in 2010 to about 29% in 2014. Capital adequacy, the group has always maintained very strong and high capital adequacy levels, and that shows a decrease. It's a positive sign that we utilizing the capital more effectively and showing the growth in our assets and the opportunity to grow even further, well above our regulatory requirements in terms of Basel III of 10%. Treasury and transactional banking. Following the launch of our transactional banking business last year, we decided to restructure the treasury operations, and we now included in the transactional banking area our domestic treasury and cash management. There's a better fit, and we believe that will add a lot of good value and help us operationalize the transactional banking business fairly quickly. Our transactional banking offering spreads from transactional bank accounts, electronic banking, card services, and also we cover deposits, money market, and investment management in this business sector as well. Okay, let me continue. On the transactional banking and treasury side, treasury in particular, growth in our deposit book, as I mentioned earlier, 25% up to 2.7 billion. What's encouraging is the growth in our term deposits, now representing over 50% of our total deposit base. There's been a significant shift from call deposits into term and notice deposits. Increase in cash liquidity of 2.1 billion. We've also launched a new deposit product, institutional term deposits, and that's grown to just under 500 million rand, and that we take only term from 6 months and above. We're fully compliant with the Basel III liquidity requirements, and they have been for the past 2 years. We have an improved, with the surplus liquidity position that we have an improved cash management and investment strategy, and that receives a focused attention to ensure we can optimize on the returns. The launch of transactional banking is a new era for Sasfin, and it's an exciting development where now we become fully a primary bank to our clients, where previously we were largely very much a secondary bank to clients. We became a full clearing and settlement bank in March 2014, a milestone, and we went live with Sasfin's own transactional banking requirements in June 2014. We plan to go live to the market towards the end of this calendar year with the remaining offerings on our transactional banking services. Group funding and debt capital markets. We have experienced ongoing success in our debt capital market activities, especially the securitization. We refinanced 362 million rand of maturing notes last year, and just recently in August we refinanced an additional 384 million rand. And this is during the period after the African bank implosion, where credit markets were already rather unsettled. It reflects the exceptional asset quality that we have in our vehicles and the strong demand for this paper. Also, we launched a new series last year, an alternative asset class of capital equipment and larger rental deals, and we raised 350 million rand in that series. We've also raised an additional 150 million rand for our private equity expansion, targeted for that portfolio, and we continue to broaden our investor base. Going forward, the key items for 2015 for this business year, but for this segment, is the launch of transactional banking, where that will allow us to have a significant shift from being a secondary bank to a primary bank to our clients. The focus to grow our retail and private client deposit base, build on our debt capital market capabilities, and explore various structured debt solutions for our lending activities. Ladies and gentlemen, I think that brings me to the end of my presentation. I'm going to hand over to Linda. It's a maiden one, so let's welcome her.
Well, welcome everybody to Business Banking. I think Tyrone stole my thunder because I've been working for many years to break the 100 million hurdle. So I think it's a big achievement to Business Banking for the year 2014, up 13%, ending on 101 million, up on 89.9 million, I think in very difficult economic times. Business Banking covers the lending side of the business. It's trade and debtor finance, equipment finance, which covers rental finance, capital and specialized, and very exciting, which I'll go through a little bit later, taxi finance. This graph is a very positive graph. I think Tyrone also went through that. Sorry, the next graph. As you can see, gross advances grown from 1.8 billion in 5 years to 3.7 billion, up on 3.2 billion from last year. Thanks to the pleasing from an incredible team behind me. Our NPL advances, I think with the growth in the book, to be at 2.7% is an outstanding achievement. As you can see, the credit loss ratios have increased marginally, but off a very low base and still well within budget. Okay, so equipment finance. It's a very solid division in the bank. It's had a strong, solid performance over the last 10 years and consistently performs. We've emerged as the leader in office automation. Recently, we've also put a lot of focus into the capital and specialized division, which has showed a 15% growth. So good, solid growth over the last 10 years and a good focus on financing different types of equipment. I was very worried in the beginning of the year in terms of the market, in terms of our margin retention, but pleasingly we managed to hold our margin retention. Very exciting as well, we've started looking at doing eco-finance along with the IFC, which not only for us is contributing to the environment, it opens a whole new market for us that we've only beginning to dabble in. So it's a big new product that we can grow business banking by. And most importantly, especially for Tyrone, our costs were well within budget. Okay, trade and debtor finance. We've also had a strong asset growth of 22%. The market, like we say, the environment, the rand is tough, but it actually suits this product because our clients need working capital in these times. And we've really stepped up and we've focused on a different type of client in the last year. And we're bringing on a far bigger, better quality client, not taken away from our smaller clients because they are just as important. But the fact that Sasfin Bank has been able to attract and manage these bigger clients, which shows that clients out there right now, they need a partner. And that's what we do. We partner, we help, we assist. And the growth of the 22% has shown, and in terms of the clients that have come on board. I'll discuss it maybe a good bit further. In terms of doing the bigger size deal, we're also working with other institutions and looking at syndicating the bigger deals. So we have the ability, because we've got the experience and the know-how to assist our clients, but if the client is too big for us, we've still got the ability to work with them and syndicate the deal with another partner. Again, costs well within budget. Going forward, I truly believe, I don't want to get too excited about it, but I truly believe that business banking is really geared to having a very good, positive year this year. We spent a lot of time investing in our people, putting people in the right places, getting the right leaders in charge of the right divisions. And I can honestly say I'm very positive in the platform of business banking this year and what we are going to achieve. We've got a tough budget in tough times. But like I said, in terms of where we are geared, the clients that we're dealing with, I think the 2014-2015 year is going to be the year for business banking. Also, I've spoken about energy asset class. We also joined the FCI, which is Factors Chain International. So it allows a lot of opportunities for us to work with. Factors Chain International is a group of all the import-export companies throughout the world. So we've got the ability to work around the world with all these different types of organizations. Recently joined, and we hope it will bring us a lot of positive business and exposure out of the South African market. I didn't put taxi finance there, but taxi finance, we've recently partnered with a company called Taxi Choice. We've just started financing taxis, but we remain positive. It's a nice new additional product within our band that allows us more growth, that fits in it and it synergizes with business banking. Cross-selling is business banking synergizes nicely with Michael's department, David's department, allows a lot of opportunities. That would make Sasfin special. Because we're a niche bank, we want to be able to offer our clients the service all the way through. Bringing transactional banking into business banking, it even allows a further opportunity for our business banking clients. We also are launching a start-to-finish product, which allows us to do forex freight finance. It allows us to help the client from beginning to end. So very exciting time for business banking. Lots of new products. Instead of really focusing on our core, which is office automation, trade and data, we're moving into different products that fit with us. And I think a fantastic 2014-2015 year. I'm not going to be too excited, but I do believe that we're primed for an excellent year. I'd also like to take the opportunity to thank our clients. We've got a strong, loyal client base. We're not a normal bank that just your client is out there. I've got a big team. The business banking team is over 173 people. And the reason that we have a big team is because we like to work closely with our clients. We don't want to be just that you pick up the phone and you don't know how you talk to. So we do partner, and we live up to a partner beyond expectations. So thanks to our clients that stand by us. I'd also like to thank my incredible team. I know this probably isn't the place, but I do have an amazing team. And a special thank you to Roland and the management team, because business banking would not have been able to break 100 million without the support of the management of Sasfin. So thank you.
Okay, so I'll present on the wealth management and capital results. Sorry about that. Wealth management made a 48 million rand profit for the year, which is just marginally up by 4% from the previous year. As you can see from this slide, our assets under administration and management have grown significantly and are now at 91 billion rand. The focus area of the business over the last few years has been to grow the assets under management, where we earn annuity income. You know, when Sasfin first got involved in this business, it was largely an execution operation, a stockbroking business, but more and more, the business has become an asset management business. And those assets now attracting annuity income are 27 billion rand, having grown by 80% over the last 2 years. I think what's important to note over there is that by and large, those are private clients and small pension funds. And that means it's a very granular client base with quite a wide distribution network, which means that it's a far stickier client, and we're confident that we will continue to achieve meaningful growth in that area. We've positioned the wealth unit as an advice-led asset manager, where we aim to integrate financial advice with asset management. In doing this, we provide our clients with appropriate investment solutions, which are tailor-made often to their particular needs. And in doing that, what we actually do is we take out the layers of complexity and often fees, which most pension funds and private clients are subject to through the more typical, call it unit trust approach, multi-managed approach to wealth management. Over the last year, we have continued to see strong top-line revenue growth, most of which is in the form of granular annuity income, which I referred to earlier. But unfortunately, we did this very consciously, but we haven't seen a comparable growth in profits, because in order to build up those assets under management, it's quite a big effort to take portfolio managers, advisors, business development executives, invest in the brand, invest in the systems, invest in the research team. And we will continue to do that, especially in a market where the independents are under pressure. And it takes time for such individuals to start paying their way. But we're very comfortable doing that because we obviously are looking to build a long-term business with long-term profitability. We have beefed up our research team and our core investment management team, thereby ensuring very strong performance in our private client portfolios. And while we did go through a period of some underperformance in our pension fund institutional solutions, we are seeing some good signs of improvement. We're confident with our investment approach and our asset management team, and we're confident that the performance will improve going forward. Finally, we have become far more focused on delivering, on service delivery to clients by way of improved administration. And that's obviously a very important part of the business. We have always been very strong at relationship management and investment management, but I feel that sometimes we've fallen short on service delivery. And with the regulatory environment changing and our competitors all improving, there's a need to invest into our admin team, into our IT systems, into our support team, and we've done quite a lot of that. And all of that, we believe, will improve our client experience, which will just further entrench our ability to grow our assets under management. Today, high net worth individuals are far more internationally oriented, and we specifically have we've invested a lot into our offshore portfolio management capabilities, and we've seen huge growth in that area, and we believe that we will continue to see a lot of growth in that area. And similarly, more and more IFAs are supporting the idea of personalized share portfolios as a viable investment solution rather than unit trusts, due to the fact that they are very personal and much more direct in nature. And we're seeing big growth in that area as well. As mentioned last year, we completed 2 meaningful transactions, which have now both largely been bedded down and are starting to add value to the group at large. We took on a strong fixed income trading desk, which leverages our stockbroking license and synergizes very well with the group debt capital markets initiatives and strengthens our expertise in fixed income as an asset class, we having been traditionally an equities house. We also established a financial planning practice in Cape Town, and we now have 500, and that team has brought in 500 million rand of assets under advice in the first year of operations, and we've now got meaningful assets under management in that total region, where traditionally Cape Town was a weaker area in our wealth management unit. We now see big scope for that branch, and all our branches, for that matter, are doing particularly well. Our focus areas for the coming year, are to improve our client service and experience with a particular focus on client reporting. We will continue to strengthen our investment management function, and we continue to look to take on strong advisors who operate in our chosen target markets that are looking for a meaningful yet entrepreneurial partner. And I think that's very important that we get that balance between offering such individuals a strong brand, strong systems, strong support, good governance, very strong investment management capabilities, but we're still entrepreneurial. They don't just become a number in this environment, and they still can, to a large degree, operate quite entrepreneurially within a very professional environment. We've also shifted our management team slightly in this unit, and we're starting to see a lot more integration between the various parts of the wealth management unit, which we believe will pay dividends going forward. On to capital. The capital division showed growth in profits of 53% off a relatively low base. As Tyrone mentioned earlier, we did have a gain due to the change in accounting treatment, but that gain was largely offset by a goodwill impairment for the acquisition of a corporate finance boutique a few years ago, and therefore these numbers reflect more or less normalized earnings. Our private equity approach is focused typically at small to medium-sized companies in the private equity space, where we, together with strategic partners, get very actively involved in the investments. This approach enables us to look at larger companies, the fact that we've got a partner in the investment, and ensures a far more active approach because both us and our partners get actively involved, and by and large is working well. We have strengthened the team, thereby giving more capacity to add value to our portfolio companies while continuing to identify new opportunities going forward. And the performance of the core portfolio has improved somewhat, despite very difficult economic conditions. We made 2 investments, proprietary balance sheet investments during the course of the year, both of which we believe have good upside potential. And Trinitas Private Equity, which we have a stake in, also made 2 investments during the year, and we see good upside for those investments as well. I think that's one of the key advantages that we as a private equity operation have compared to our competitors is that we get a huge amount of deal flow from the Sasfin network. And just recently, someone joined us from another private equity house, which is completely focused on private equity and larger than us. And he just said to me that he was amazed at the extent of the deal flow that we see in our business, and I think that that's correct. On property, during the course of the year, we exited our investment in annuity and established a new product where we facilitate tenant ownership of their premises through a co-investment model. We will also use this product to enable businesses which currently own their properties to unlock some cash off the equity in their properties. This approach, which is slightly different to where we were historically focused in this unit, is tenant-focused and synergizes very well with the group in general because of our exposure to such tenants who want to either own their properties or want to, they need cash given their working capital cycles. And therefore, we see it synergizing well with the group, and there's a healthy pipeline in this business. And as you can hear from both the private equity and the property equity businesses, we're gearing up for more deployment of capital as our funding base grows, as our equity grows. We see good scope for both of these businesses. And in that regard, during the year, we decided to integrate our corporate finance business far more into the rest of Sasfin Capital, which has resulted in some staff movements. We have chosen to position our corporate finance business more in a similar segment to where we want to operate in the rest of the capital business, and to unlock synergies across the whole group. And I think that this is far more appropriate than where the unit was historically positioned, which was far more in the line with the boutiques, which didn't have any balance sheet to differentiate with, which we do have. And in doing that, the unit actually struggled to differentiate itself or carve out a space for itself in the market. As part of an integrated capital business, we're more confident that we can find a space in the market which has got meaningful barriers to entry, because the larger players can't deploy capital in the same area of the market that we can, or they can, but they choose not to, because they focus on typically much larger deals. And the boutiques, where there's so many of them, they typically don't have balance sheet to enable private equity and property equity investment. And debt investment through the business banking base. As mentioned earlier, there was a goodwill impairment due to the acquisition of a corporate finance business. Just not to repeat myself, but essentially going forward, our primary aim is to deploy capital, whether that's debt or equity, into businesses and properties. Often, the deployment of such capital will require a partner, a co-investor, some form of syndication, which is becoming a bigger focus area of the group at large. And that allows us to do bigger, more meaningful transactions, as well as to bring in a partner who's got certain expertise, whether it be sector expertise or industry expertise, which might be appropriate for the particular investment. And then lastly, many of these companies, both in the capital base and in the business banking base, require a full range of corporate finance services. They may get to a point where they want to list, or they want to do some kind of mergers or acquisitions, and we have a team that can play into that as well. So we think that we're far better positioned to leverage our position this way, but there's still a bit of work to bring all of this together, which we're currently very focused on. In summary, I'd just like to thank our management team and their staff across the wealth and business and capital units, and our clients for their continued support. Thank you very much.
Good morning, ladies and gentlemen. I'm going to be talking on the results for Sasfin Commercial Solutions this morning. The Commercial Solutions division was formalized in 2011 out of the iQuad acquisition, which at the time was a smallish Altex-listed financial services business. We took that iQuad business and we also combined it with the freight and logistics activities that Sasfin had through Sasfin Premier Logistics, as well as the healthcare and short-term operations, and we formed this specialist division focusing on corporate clients called Sasfin Commercial Solutions. If we could just move forward to the results. I think overall we are pretty happy with the results. We delivered a solid set of numbers, and the headline earnings were 35.3 million for 2014, up 5% on the 33.8 million achieved in 2013. But I think if you also consider the fact that 2013 was a record year for us, and we'd shown 75% growth in that year over the prior year, then the results for this year are pretty solid and follow in on good performance in 2013 as well. If we could just delve into some of the different business units. So if we look at our core operations, performed pretty well this year and in line with our expectations. That's the incentives business, where we facilitate access to government funding for manufacturing clients through the Department of Trade and Industry. Our global trade business that does a variety of solutions to clients around the global trade function, including duty recovery work, specialist work in the automotive industry, and then also our IQuad treasury outsourcing business, which is involved in foreign exchange risk management and mitigation for clients that have got big foreign exchange exposures. The other highlight for the year was that we've now fully integrated the Sasfin Commercial Solutions operations into the broader Sasfin Group. I think what we're seeing is good cross-sell opportunities between these different businesses, and we also have a lot of common offerings to our common clients that we can put forward, specifically dealing with the other divisions such as business banking. As of February this year, we took the decision to incorporate our international treasury business and rebrand it as Sasfin Forex. We've incorporated this into commercial solutions for two main reasons, the one being for renewed management focus, and the second primary reason was we felt that the client base was a lot more complementary and conducive, as well as the service offering that we're offering into that client base, that it made sense for us to house this business under commercial solutions. And we see this business, or this area of our business, as having good, exciting growth prospects for the year ahead. Moving on to Sasfin Premier Logistics, we saw very tough trading conditions in the second half of the financial year, starting from December, January 2014 through till the year end in June. And I think the tough conditions were brought on through three main factors. The one is that we predominantly have an importer client base, and in that environment, the rand depreciation, the labor unrest, and the subdued economic demand impacted on volumes that our importers or our importer clients were bringing into the country. During the year, in January, we successfully moved our operation to Pomona Road near OR Tambo. We've commissioned a purpose-built warehouse facility and office block, and we see this as a key growth opportunity going forward, where we can offer more warehousing-related services to our existing and future clients as well. And then finally, in SPL, towards the end of the financial year, we took a decision to do some slight restructuring in our Gauteng market, which is our core operation. And we're pretty confident that these changes will bring about even improved sales and customer services going forward. I think it's noteworthy that we saw revenue growth, top-line revenue growth, and margin growth in this business when most of our competitors were either flat or declining, given the state of the economy in the second 6 months. Moving forward then to our short-term insurance broking and healthcare consulting businesses. Short-term was up 32% top-line revenue this year, albeit off a fairly low base. We still expect to see good results and growth coming from this business in the years ahead. And our focus is really on internal opportunities and cross-selling into our existing client base, but then also pursuing a number of broker acquisitions that we are working on at the moment. Sasfin Healthcare remains a leading independent corporate healthcare brokerage with approximately 16,500 lives under administration, and we see this business producing steady growth in the year ahead. In terms of the way forward, we've really identified 4 key focus areas for the year ahead for 2015. First one is to gain market share in Sasfin Forex. I think the Forex business is an exciting opportunity. It's an area where Sasfin is fairly small and has quite low market share. And we have the systems, we have the platforms for clients, online platforms for clients that we developed, and we also have the people in place, I think, to take this business to a new level in years to come. Second focus area is to increase volumes in Sasfin Premier Logistics. The freight forwarding and clearing business is very much a volumes game, and it's very important for us to achieve critical mass. We will use our warehousing facility as an upsell opportunity to existing clients and also as a means to target new clients. We have a very, very modern state-of-the-art facility. Third focus area is to bed down a systems implementation in our IQuad treasury outsourcing business. We're coming from a situation where we've got a number of legacy systems in that business, and we see implementing a SunGuard platform to manage our treasury outsourcing relationship with our clients as an area that can give us key competitive advantage in years ahead. And then finally, as I alluded to earlier, we would like to expand revenues in our short-term business, and we've identified a clear strategy to focus on a combination of organic growth within our existing client base and also pursuing a number of acquisitions in the brokerage area. I'd now like to hand over to Roland Sassoon, who's going to discuss the strategic overview of the group. Thank you very much.
All right, good morning, everybody. Before I really start, I'd like to thank my wonderful team here and their staff because they really are great, fantastic. We were just looking at our business model, and I think it's quite important to just stress that the two things that we do really are we partner with investors and entrepreneurs. That's really what our business is. And we see that as a very sustainable business. And they are, in fact, investors and entrepreneurs are really what makes any economy grow. And that's our whole business. It's a very positive business. We don't lend to over-indebted consumers at 60% per annum. This is what we do. We lend, we deal with people who are going to use our assistance to grow and to grow their businesses and to grow the whole South African economy. So that is the sustainability of our model, which I think is very different from some of the monoline banks that we are seeing out there at the moment. As a multi-line banking and financial services partner that, as Linda says, exceeds client expectations, we provide that each service has to be viable, competitive, scalable, and synergistic. And this is how we have a matrix that tests each product. We've got about 25 products in the group to make sure that we do comply with this. Right. The strategic objectives that we set ourselves, I think we have achieved pretty well. Maintaining solid liquidity and capital ratios, increasing funding through term deposits and debt capital market products, increasing brand awareness and public relations, and setting up the transactional banking. So I think that's all been very positive. Just carry on. Where we have partially or not achieved is critical mass. This is an ongoing thing, and being a small multi-line bank, each of our activities is obviously particularly small, and we need to get critical mass in each area. So we have improved. We've got a long way to go. Each one of our products is highly scalable, and we have to keep growing at obviously a reasonable, steady rate. That has been our model in the past, and that will continue to be our model in the future. We're improving our IT infrastructure. There's a lot of development going on in the different areas. Investigate prospective products. Linda alluded to a couple of new products that we're bringing on. We can constantly looking for new products which fit our matrix. And as far as black economic empowerment is concerned, we haven't actually achieved very much in this last year. Well, I can tell you that we've looked at a lot of deals. It's very important for us to improve our black economic empowerment status. And we are working on a couple of initiatives right now, which hopefully will materialize, but there are no guarantees. So objectives for the new year: continue to increase funding, profitability, grow existing divisions, investigate new products, improve black economic status, continue to improve efficiency, launch transactional banking, and broaden our franchise value. So I think that is the presentation, and we're happy to take questions. Thank you. Any questions? No questions? Ah, there's a question. Ben.
Okay. So thanks. So first of all, congratulations, I think, for a solid set of results. My name is Ben Makela, and I have one question, maybe to do with the strategic objective of sustainability, so sustainable growth, and in particular with regards to the capital position, the capital adequacy ratio. I first of all acknowledge, I think it's far high, compared to the rest of the banking sector. However, I think if we look at the last 2 or 3 years, the trend has been downward, maybe 600 basis points in total over the last 2 years. And it's clear when one looks at the growth in the risk assets. However, so having said that, my question is basically on the outlook for this trend. Given the graduated compliance requirements of Basel III, which I think by 2019, 1st January 2019, basically we expect an increased level of capital thresholds. So if you have got on the one hand expected increased thresholds for the capital adequacy ratio, and on the other hand you've got this ratio in the context of Sasfin going down, I just want to understand the outlook for this type of trend and whether you've got a target for this particular indicator. Thank you.
Right. Okay, I'll deal with that. So, as you say, we have been criticized over the years for being overcapitalized. But I think if we go back a few years, I think we had good reason to want to be overcapitalized because we didn't have the spread of activities, the spread of revenue. I mean, banking is all about risk, and risk is all about spread. And that's why we spread ourselves the way we do. And we're getting much more balanced spread than we've had in the past. And that's why we're happy for the capital adequacy to reduce. And that should continue. We do have certain target capital adequacy ratios, but they're not public. It's not for public information, I'm afraid. But we're well over those targets, and as you can see, we're well over the regulatory requirement. Our business is growing, and I think we will see a continual reduction in the capital adequacy ratio. But we need capital in this business, and we are now starting to target bigger clients. So that also comes into the equation. If that answers your question.
My name is Joel Chimanda. I look at it's probably your strategic approach. When you look on that last slide you presented, what are the objectives for the new year? I wonder whether you have any views in growing or replicating your model outside of South Africa in some of the markets where if you had the right partner locally, your skills, capacity, management, systems, and IP, you are able to provide a wholesome solutions to what would be, for example, in Kenya or in West Africa, your target client from a South Africa perspective, but it's a pretty big business there. So what I'm saying is have you looked at outside of South Africa for you to replicate your model? Because it looks, if it works here, it probably will work elsewhere. But I'm not assuming an acquisition that you manage, some form of a partnership where you have access to the opportunities in the market, or you haven't thought through that.
Well, we definitely are thinking about it all the time, and in fact, we are looking at a couple of initiatives as we speak. Risk is a big factor, and we need to be close to our clients. So, if we're lending to a client who's far away in another jurisdiction, the risks are much higher, and for that reason, we have to mitigate those risks through credit insurance and other mitigants. So it's a complicated subject, and being a small, we are obviously a relatively small bank. We don't have the infrastructure to just transplant people from South Africa into other markets. But I agree with what you've just said, is that to partner with other players in other markets makes a lot of sense. And in fact, we are talking to a couple of people at the moment, but it's still early days. So that's why we haven't really mentioned it here.
So just a follow-on question, if you could bear with me.
Yes.
My question really is to say, find another Sasfin in a country who has the balance sheet, meets the regulations, etc. And the idea is to see whether you're able to realize an incremental return, because skills and capacity and models is one of the things that lacks in some of the markets. So I'm not asking about for you to use your balance sheet to loan, but to use the IP and relationship for some return, which means really from a risk perspective, you shouldn't have. From a governance perspective, you would do your due diligence and bring in a potential partner that really meets a AAA sort of JV arrangement or partnership.
Yes, so that's also part of what I'm saying. I mean, it doesn't, as you say, it doesn't necessarily have to be a major investment. It could be just to be a strategic partner with other players. So we're looking at all these things, and we constantly look. In fact, I've even organized a trip into a certain African market in the next few weeks. We're working on something. So we are working on things all the time. No further? There's a question. Ilan.
Thanks very much. Congratulations to you all. Terrific results. And specifically on the introduction of your transactional banking platform, along in the waiting dream, I think, for the group. Is it too soon to talk about a lending strategy around that transactional banking platform? Do you have an intention to ultimately lend to your transactional banking clients as well?
Okay, so let's just get this right. We want to be a primary bank. We're a bit tired of being a secondary bank, where we lend to clients of one of the big four or one of the other banks. And those banks can see exactly what we do with their client. So it puts us at a disadvantage. So our first target is to become a primary bank to our existing client base. We then, that's as far as our entrepreneurial client base or Linda's client base. As far as Michael's client base, the wealth client base is concerned, we will certainly be offering the service to those high net worth individuals. It's really not a retail offering, rather for that type of client, for a better end client. And that's the client that we're looking to deal with. We will, and we do in fact, provide a bit of short-term accommodation and overdraft type facilities to those clients, and we will step that up. As far as the retail market is concerned, we're not a retail bank, but there are certain retailers out there who need to work with a bank. So we are talking to some of those people as well. But that wouldn't be our client would actually be the retailer rather than the public. I mean, conceptually.
Just for clarification, does that mean that the strategy around providing transactional infrastructure may or may not include card acquiring devices and transaction execution support?
No, it will. It will. I think perhaps Tyrone will talk to this. He knows more about it than I do.
Yeah, so I think certainly the transactional offering is a full transactional capability for clients that covers full electronic banking, card, internet, ATM, etc. Our model is largely based on a branchless model, so we're going the electronic route, and that's the technology partner we're partnering with. And as Roland mentioned, the intention is not to get into retail lending. We phased the launch of our transactional banking over a 5-year period. That's the strategic vision that we've taken to ensure that what we're really doing with transactional banking is we're bringing ourselves on par with the rest of the banking industry. And that is a significant milestone for Sasfin. Thanks.
Thank you.
I think we actually get switched off at 11:30, but we can talk. We'll go over there and we'll discuss.
So just maybe one, I think in the teleconference, is there any questions from that audience?
There are no questions from the conference call.
Thank you. So please join us for some refreshments.